Hello, this is Datatraderpro, August 8th, Monday, with a nightly market wrap. I'm going to try and keep this brief and focus mostly on the longer-term internals and volatility picture, because I think that's what's going to define what happens next in the markets. And I think we're running out of steam. We're topping. It's been really hard to call a top. I don't think many people are going to be successful in picking the exact moment of a top here, but we'll look at some internals, and I'll show you why I think that's in play right now. Okay, so this is the NYSE advanced decline weekly. We made a high back a month ago, so we've made 5 weeks with lower highs. Still green. Market's still bullish in terms of price action, or at least consolidating on a high, which is generally bullish. But we basically peaked out about as high as we can go here. Everything that wasn't bolted down was bought post Brexit. We haven't made a high on advanced decline since. Composite, NASDAQ composite, 6 straight weeks up. Amazing move, nice 45 degree or 60 degree perhaps up move. Technicals are starting to roll over on the weekly. Volume is definitely a lower high, perhaps the start of a bearish candle, but it's Monday, so looking at a weekly chart on Monday, you're not going to gain too much from candle patterns, unfortunately. On a daily, we're still, we're pushing high, but in the overall picture, we are roughly at a double top area on the composite. So technicals are weakening, although they've been embedded to the upside for some time. I think this double top is going to give us some resistance. These are the Dow Industrials. Let's go to a weekly. Good move, but technicals are again overdone to the upside. Top of the weekly Bollinger Band was hit. We had to pull back to the 8 weekly, and then we popped up higher. We're going to have to see if we can gain any steam. My thought is we're just about topped out. We might have a little bit to the upside here. We might be curling there for another little pop, but things are getting pretty overdone here. So, summer doldrums of relatively low volume trade and not much action has been defining the trades. After open has been settled out, people have placed their trades for the day. There hasn't been much action for the rest of the day for the last couple of weeks, aside from Friday, where we had our first bullish trend day in ages, I think about 15 sessions. So here we go. These are the transports weekly, much lower high. You really want to see, this is one of these Dow theory indicators that people like to look at and say, like if things aren't being shipped, rail is still big in the Dow transports. You're not shipping bulk items for construction and for bulk materials and things like that, then it's a sign the economy is slowing down. But anyway, much lower highs on a weekly. Let's look at IWM. Again on weekly, top of Bollinger Band, starting to curl down on technicals, declining volume. Much lower high. People are getting so bullish about these things, but if you zoom out a little bit, you'll see that we topped at the end of June 2015. It's been a 14-month period without another high. So technically, that's in a corrective move right now. That we until we take out this high, that was our high. We have a down move, we have a corrective move back, and then the thought is more down, but we'll see how that plays out. NASDAQ 100 tech stocks, even off these earnings, again the old trick of lower the earnings expectations and then beat them and then rally. We've been doing that, but again, topped out weekly Bollinger Bands, technicals curling. Daily picture, still very strong, well above all the key moving averages, still moving up. Embedded stochastics to the upside. So really hard to call a top in a market that's this aggressively bullish, but it's looking pretty weak. It's looking pretty done to the upside at least. And even if it's bullish, I expect it to pull back probably to the 20 weekly or the daily 50, which are fairly close, something like that. Yeah, here's a 50 on the daily, 56.70-ish, that period. OEX is the top of the S&P 500. Let's look at weekly. Top of the Bollinger Bands, pretty overextended. It's as long as it's over the 200, then it's all good. But that's a long way down, right? So we didn't hit those lows last year, right? The 200 it stayed above. So the S&P 500, again, weekly Bollinger Bands, curling technicals, declining volume. Our volume pictures, a series of lower highs. So we expect lower volume again this week. Obviously, it's summer, so we'll probably get that. Unless we get a big down move, then volume's going to come in as the sellers come in. What else do I want to look at? I want to look at volatility. And the reason, I'll probably start with VXST, actually. VXST has hit a lower, let's go to the daily, hit what I believe is the lowest daily close. Here we go. The lowest daily close in its history, I believe. Unless the data on this chart from TC2000 is wrong, but I don't remember a lower close. So we closed just slightly above 9 on Friday. And obviously we popped up a little bit today, but basically this is the 9-day version of the VIX. Everybody looks at the VIX, but they forget that there are a lot of other volatility indexes from the SIBO. And by looking at the different periods of implied volatility, you can kind of get an early warning on when VIX is going to get a pop, because VXST will get oversold to the downside much earlier and then start making a rebound earlier than the VIX will, because VIX represents the 30-day implied volatility. So obviously 9-day implied volatility starts sniffing out a move much earlier than the VIX, and the VIX will, in the same manner, will start sniffing out a move before VXV, which is the 3-month version of the VIX. It's 3-month implied volatility. So what's happened here is we've got the absolute low reading below the daily Bollinger Bands. Any move in VXST does not imply a long duration move because it represents a rolling 9-day index. So you could get a big pop and then it just doesn't last, and it might barely move the VIX. So we'll have to, it still remains to be seen. But I think we're building a move here. You look at the other occurrences when we've hit 10 or under on the VXST, and that was here, and so we had a pop up, drop down, and then we started a real move. And all of these, any of these areas here, certainly the beginning of August last year was a massive move. Any of these low periods have always launched a move. There's I believe 100% occurrence rate when you get down to 10 or below on VXST that a volatility move is ignited. Anyway, we'll have a look at the VIX. And again, very low. Now, I believe on a weekly basis, this is one of the lowest readings since 2007, 2008. Let's get a date on that if we can. I think I need to get this one. And that would be, so end of February 2007. So since the end of February 2007, this is on a weekly close basis. There's only been 1, 2, 3, 4. This is one of 4 moves down to this area since the basically the Lehman Brothers and the big market fall, and huge. That's what that is, the huge rise in volatility that came out of the late 08 market crash, and so we're getting down to areas where it's shorting volatility down here is picking up pennies in front of a steamroller, because there's really not much more that it can go. Theoretically, it can go lower, but actually, in real practice, you've got our long-term mean on VIX is about 19.75. So, it's really not got much room to the downside left, and it's got a lot of room to the upside. So, whether you want to be shorting volatility right here, I wouldn't want to be personally. VXV, I'll get rid of some of these drawings. We had a trend line here below that, and we broke it. And this is on a weekly basis. So we've seen 1, 2, 3, almost a month below our trend line. Technicals are bottomed out, and let's maybe go to a daily, and we'll see that 2 days at the lower Bollinger Bands and the weekly, really tight Bollinger Bands, which markets coiling and building up energy for a move. That's going to be the upside. It's not going to break and go to 7. It could go to 12 or 10 or something, but it generally doesn't. The 3-month volatility index generally stays within a fairly narrow range, and then obviously when you get big moves like August or maybe even like things like Brexit, you get a pop on it. So really, the main theme is market hasn't made new highs on advanced decline. So everything, we had a huge burst of buying, and then there's been some continuation trades, but not massive new buying following all that up, and declining volume. Volatility's roughly at its lows, and there's not a whole lot else we can do but move up at some point. It doesn't mean that we're going to get a massive August 2015 like move tomorrow, but something's coming. Volatility's coming, and the market's going to have to take a breather. Even if it's bullish, retraces are healthy. It shakes out the chasers. It loosens up supply. It gauges people's interest and appetite for further upside, and I think that's what's at least what's needed here. All right, we're going to look at some block trades. We're going to look at our profile chart first, and note that we made a new high. We did build some block trade volume, but that that might be the start of selling up here. We pop below, and there's not much volume. Really, on the profile, your support is in this sort of 216, 216.50 area now. Your initial level of support. Below that, you're starting to drop off on block trade volume until you get into the 210s, 210.50 roughly. These are on 6 months of block trade volume of only the largest blocks, so 250,000 shares and over block trade. So I've really made this chart for the express purpose of looking at institutional supply and demand, institutional support and resistance, rather than just like all the mom and pop traders who trade small. This chart would look quite a bit different, but I think it's probably a little bit more meaningful in terms of longer term support and resistance done this way. It's basically another way to look at this chart, which is our longer term SPY block trade chart. But sometimes this, you start to get a lot of readings on here, and it starts getting a little less clear. So that's fine. That was last our support after our Brexit low. We had a massive, I think we had something like 52 million shares traded at the low on SPY and block trades. So that's easily definable, but there's so many trades in here and so many little levels that we created the profile chart to have a little better look, a little easier reference for these levels going into the future. So you can zoom out any of these levels and look at how much support and resistance there is there. All right, we'll look at the indices, ETFs. SPY again, on this is a shorter term chart. Fairly big trade up here, 3.3 million. We really haven't gotten much above that. We popped a little bit above it in price, and then we started to see some late sell prints, or what appear to be sell prints coming in. So as long as we stay below this 218.25, 24.25 area, certainly this big guy's 218.14, our high, I believe, 218.48. So really like under 218.50, but certainly under the 218.24.25 level. And then we're looking for support down here, 216.30.37. I would say that's going to be our initial support. There may be some support in here from these guys, the 216.90s. There were quite a few trades in this level first, so we may hit that first. QQQ. Lots of support in here in the 115.65 level. Very similar picture to SPY, although we had more block trades on the highs than SPY. So, going along with that, the Qs were slightly weaker today. So, it appears that this could be some selling at the top, but we're again 116.84 82, 116.80. That if we rally above that, then obviously these are going to be support levels, and the market's still in a bullish phase, and don't fight it. IWM, not a ton. I mean, we've had some block trades up here, decent size, 1.2 million, that sort of thing. 122.22. We had some on the highs. This is looking like distribution also. So the picture's fairly consistent. When we get to the Dow, for a while they were selling every pop high, selling every pop, and now it appears like they were in a buying phase. So these were buys because they were late buy prints. Price got above, came down here, right around here. A million share print, 250K print. Price popped up and really got down a little bit. Had less than 100,000 shares, but still a supportive print. So Dow was the one that was leading down, and now it appears to be the one that's getting the most support. QQQ was the one leading up, and now seems to be getting the most block trades on the highs. So that's, I think, probably it for today. That's enough of a wrap. You get my drift by now. I think we could have a pop higher, but I think it will get sold. And I think technicals and internals, at least if the market wants to continue up, is going to have a healthy pullback, some real selling, and not like just a single day of a 0.5 or 0.75% sell off. I think we're going to have a couple of days of selling, and we're going to have to move down at least 1% or 2%, and probably more to reset this market. Okay, so thanks for joining us, and we'll talk to you soon. Bye bye.